Hey, this is Rick on In Front of IT. And in latest tech news, another round of tech layoffs as Microsoft lays off 10,000 employees in its largest layoff in 8 years. So let's get into it. Microsoft is cutting 10,000 jobs, the company said Wednesday, as it deals with the economic uncertainty and shifts focus to areas of growth, such as artificial intelligence. The cuts, which began Wednesday and will go through March, will impact less than 5% of Microsoft's global workforce, CEO Satya Nadella said in a memo to employees. The tech giant declined to say which roles are being cut, but the layoffs are reportedly impacting its engineering divisions. No surprise there. These decisions are difficult but necessary, said Nadella. They are especially difficult because they impact people and people's lives, our colleagues and friends. The cuts come ahead of Microsoft's quarterly earnings on Tuesday and almost 3 months to the day since the tech giant laid off nearly 1,000 employees in October. It's the largest layoff at Microsoft in roughly 8 years. So this is just the latest round of layoffs, especially in tech. What's causing this? My opinion, these companies have had access to easy money over the past 10 years, and now they have to service that debt at higher rates due to the Fed raising interest rates to try to counteract inflation. To do that, they cut employees, plain and simple. They have to pay larger interest payments on the debt, and they get that money from employee salaries that they let go. So I speculate that we'll see this trend continue, especially with technology companies. Stick around to the end. I do have an opinion on that, or how you can be ready for when the job market heats up again. In addition to the job cuts, Microsoft said it also plans to make changes to its hardware portfolio and consolidate its leased office spaces. The changes, including severance, are expected to cost the company $1.2 billion, Nadella said. Microsoft's decision adds to the layoffs that have hit the tech industry in recent months. Google, Verily, T-Mobile, Intel, and Meta, among others, have reduced staff in response to economic upheaval. Amazon is also cutting 18,000 jobs. Now, just looking back at some of the history of these layoffs since last year, 2022, Meta, the parent company of Facebook, cut about 11,000 jobs. Twitter, since Elon Musk purchased it, have cut 3,700 jobs. And that's employees. That's not counting the contractors they also let go. Lyft cut around 700 jobs. Stripe, online payment giant, around 1,100 jobs. Coinbase, crypto company, cut around 1,100 jobs. Shopify, around 1,000 jobs. Netflix, around 450 jobs. And it just keeps going on. So basically what's happening here is, like I mentioned before, these companies have been having a huge influx of cash at very low competitive rates. Think 0.5 to 1%, able to borrow billions of dollars and focus that on growth. And growth meant people. And that's been since the Fed have kept rates low since the last recession, which was 2008 to 2013. So about 10 years. So now with this rampant inflation, the Fed is raising rates. The price of this debt goes up, and these companies need to cut staff to compensate for the increased payments back on that debt. We should expect to see this continue, but it doesn't mean that IT or working in the tech industry is dead. Far from it. There's a lot of things coming up in the tech industry which will increase the demand of technical professionals. My thinking is if you focus on the areas of automation, possibly cybersecurity, or compliance and auditing for compliance programs such as PCI or FedRAMP or SOX, you'll still do pretty well. Because no matter what, these companies will have to have these type of people on staff. My thoughts are the people they're laying off right now are the ones that they feel they can replace with automation. And going back to the article I just read, Microsoft stated that it's going to shift focus areas to areas such as artificial intelligence. Everyone is looking into how to automate people out of jobs. Where the opportunities will be in the tech industry is how to program the automation, that type of automation that businesses are looking for, how to make sure that that automation is compliant, secure, how to make sure that automation can scale, how do you design what that automation runs on. So I think wrapping yourself around those areas is where the growth will be. The traditional support model of supporting servers, traditional reliability engineering, where you just kind of patch servers or do updates of applications or deploy applications. Those are where the roles are becoming redundant as those type of tasks become automated. So do you think it's time to look into other areas of industry for work opportunities, or do you think IT is still a good place to be? And if you think IT is still a good place to be, what areas do you think are good areas to focus on within IT? Cybersecurity, DevOps, application development, infrastructure architecture, or infrastructure support, or something else? Let me know in the comments below. If you made it this far, I want to thank you for watching. Please like and subscribe. And let me know what other topics you'd like to see videos on in the comments below. This is Rick from In Front of IT, signing off. Thanks for watching.